Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, October 20th, 2010. This morning I'm talking about a dead cat bounce. And what I refer to there, it's a technical term that after you get a big sell-off, sometimes you get a little bit of a retracement of that sell-off when it bounces back. So it's called a dead cat, dead cat bounce. Now I don't want to go into the visuals behind it, but this is a technical term that's been around forever. Now usually this occurs after a much larger move down. All right, but I'm calling this sort of a short-term or an intermediate-term dead cat bounce. Now, what may have happened in the markets here is we may be looking at a reversal of trend from the dollar weakness trend that we've been seeing. All right, yesterday we had dollar strength, we had market sell-off, equities were down, commodities were down, and today we're getting the opposite. So today's a classic risk appetite day. All right, but I'm still, wondering if this is if we're going to see continued dollar weakness driving markets. We've got this G20 meeting coming up this weekend, and I wonder what the Fed's going to say ahead of that. And today the Fed Beige Book report comes out in the state of the economy. Looks like the market's expecting them to continue with the QE2 rhetoric. All right, so saying that they're going to ease further, but I think they may back away from that. I mean, how can you go to this meeting this weekend and sort of brand everybody else a currency manipulator, and then just a couple days earlier you talked about doing your own easing. So we may see a reversal a little bit later today when that news comes out. But I just want to take a quick peek here. Aussies bounce back. All right, just looking here in the 30-minute chart. As you can see, the short-term trend is down a little bit. And I just ran a fib retracement level here. All right, 50% retracement is at 98.30 thereabouts. So we could see a little bit of resistance there. All right. Also want to take a quick look at the euro. Okay, Euro chart looks the same. We can kind of, we'll just run a Fibo right here, see if anything pops up. Looks like 139.23. Looks like we're just south of that 50% retracement level as well. So we're going to see what happens here later today, and with this Fed move, and see what the Beige Book has to say. Now, I just want to talk about the pound briefly. We can look at the pound. Yep, okay, same looking chart here, although we haven't hit the first level of retracement, that 38.2 level yet. Now the pound is weak, but it's up against dollar this morning. All right, they came out with the B of E minutes, and basically it took a slightly dovish stance. I mentioned yesterday that there's this sort of this three-way argument going on there, where one guy wants to raise rates, the other guy wants further easing, and everybody else is sort of in between. So they've taken sort of this dovish stance, saying that they'd be open to further easing. Okay, now this comes on the back of the budget announcements that just came out. Now, Chancellor of the Exchequer Osborne came out, and he put forth the new budget showing austerity. Okay, they're going to try and get rid of their budget deficit, which is quite large. I think it's around over $200 billion US. They're going to do that by, raising taxes and levies on the banks, by cutting some of the government workforce, and really trying to get lean and mean. So, right now the pound is a little bit weaker, as there's still fears that perhaps, this could sort of push the UK back in the double dip area. But right now, I think they're going to take a wait-and-see approach and sort of see what happens. So that's kind of what we're looking at with the pound. So, basically, dollar weakness is just driving markets today. And you can see dollar's weak here versus the yen, also in the 30-minute chart, which is a little bit opposite or a little bit outside of what a classic risk-taking day would be. So, I think the market's really waiting to hear what's going to happen with the Beige Book today to see if we're going to get any of this further easing. Now, two schools of thought going on with the further easing. If we do hear from Bernanke and the Beige Book today that the QE2 rhetoric's still on the table and that they're still talking about easing, all right, we could see the dollar weaken further. That would drive markets higher. But my guess is that if they do that, they're not actually intending to ease. All right, just the rhetoric surrounding the easing is enough to move the dollar lower. Okay, now if they come around today and they back away from the easing stance, we could see dollar strengthen. But what that could do is, if dollar strengthens enough, that could put the actual action of doing the easing back on the table. All right, but what we have happening is it's interesting. A couple of weeks happening. We've got this election election here in the U.S. On November 2nd, which could change the political landscape here in the U.S. You've got Democrats in charge of both houses of Congress right now, as well as the executive branch, and people are saying that could change. Now, the Republicans have come back with this idea of fiscal restraint and cutting spending. All right, whether or not they actually do it, though, remains to be seen. But we could be seeing a little shift here in the political landscape in the U.S. So perhaps Bernanke's not going to do anything regarding this either way. So it'll be interesting to see what the Beige Book says today. But I'm thinking that perhaps this was the start of the reversal. That we may be seeing a little bit of dollar strength. I mean, let's face it, dollar can't weaken forever. All right, and the idea that people are putting forth that we want weak dollars to encourage our exports. Well, I think that's a little bit disingenuous. I mean, the only thing we seem to be exporting these days is inflation to emerging market economies who are all crying foul, all right, because now their currency gains are threatening their own economies. So what I'm thinking really is the idea here is that they want to encourage inflation, but Bernanke's got to remember that hey, this isn't the Great Depression where he's the grand scholar on the thing, and markets can move much more quickly than his textbooks say. So if we get the slightest hint of people catch on that he's trying to get this inflation going, we could see some major inflation right out of the gate, and that's all going to depend on whether or not they go ahead with this QE2, which I think that they're not going to do. All right, now the question is that will the rhetoric today say yes or will it say no? So that's kind of what I'm keeping my eye on today. The release of the Beige Book, it's coming out. I'll tell you exactly what time it's coming out at. It looks like 2 o'clock or 3 o'clock today. Boy, I should switch this to Eastern Time. 2 o'clock today. So keep your eye on that in the markets, and good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.